Good morning, everyone, and welcome to Morning Markets on Friday, the 3rd of April. A couple of things that I wanted to share with you this morning that we've been discussing as an investment team. The first of which is the dramatic events yesterday in the oil market, where, as we've been discussing previously, the oil price has been exceptionally weak over the course of the year to date, a combination of a number of factors, primarily initially an oversupply situation, and then the demand shock from COVID-19 significantly disrupting demand for oil. As a result, we've seen the oil price fall close to 60% in the past 3 months, and indeed at the start of this week was trading at an 18-year low, taking it back to that of sort of 2002, 2003 levels, when we can think about the political situation then that was very different to today. What happened overnight? Well, we did see that President Trump had his favourite policy tool in action, the Twitter account, 2 tweets that suggested that he has potentially brokered a deal between Russia and Saudi Arabia. I say potentially because that's still not clear. We did see messages from the Saudis yesterday asking for and suggesting that it would be a good idea for OPEC Plus to meet in the very near term. So there is some grain of hope in that. I think the other thing to say is we saw a very dramatic move in the oil price yesterday, with it closing up nearly 25%. It had been significantly higher through the day. But that just gives you an indication of the volatility. We've talked about the movements in equity markets in terms of the historical precedent that they've set in through March. I think looking back over the chart, that's probably the largest intraday move that we've seen in the oil price in its history, as far as I could see in the chart. This is important. The oil price and how that feeds into markets, economies, and companies is very important for us to consider. A higher oil price clearly would be supportive of companies involved in that sector, the energy companies. It's also important for a number of the economies of the oil-producing nations, and particularly in emerging markets. So if we are to see some of this move through, it would be a positive, supportive. I think the other thing, just to add there, other areas of asset markets that would be positively supported would be the bond market, particularly at the lower quality and high yield end of the market. So that's something that we'll continue to monitor over the coming days. I also touched yesterday on China, and China looking to be buying more oil in the market. I think the statistics are bearing that out. One of the stories that did come out over the past 24 hours is that they may be using some of that oil to build up their strategic petroleum reserves. That would make sense given where prices have got to and the oil-dependent importing nature of the Chinese economy. I think the other thing that we touched on yesterday and we spoke about last week was the job situation in the US. Unemployment claims came in at a significantly higher number than had been expected. 6.6 million people claiming or signing up for unemployment benefit in the US. We get a further indication on that today with the unemployment report for March. That'll not be indicating such a high number because that is obviously only capturing part of the COVID-19 shutdown in the US. But again, it's something for the market to look on. I think will be one of the things that the market will focus on through the course of today. That comes out this afternoon. Other economic news, we get services sector PMI data from Europe and the UK. Again, slightly backward looking, but worth having a look at just to get a sense of what is happening and how economies were positioned as COVID-19 has rapidly escalated across the globe. The other thing on a positive side, I think, is what did we see from UK house prices yesterday? UK house prices for March were rising at their fastest pace in a number of months, up 3% in value terms. What does that say? Well, it just gives us a little bit of an indication of how confidence had been returning to the housing market prior to COVID-19, and potentially as we work our way through this, that there is some resilience in that side of the market. Obviously, it's going to be very closely related to how the economy evolves and how the unemployment situation evolves. But backward looking, but an indication of the positive sentiment that there had been in the UK market. That's it for today. Look forward to seeing you again next week. Thank you very much. Bye.